Are we making a final low in the mining stock sector? Especially like right now, especially the silver mining stock ETFs, we could be creating a final low here. I want to share that with you. And I've been speaking about it the last few days as well too. Plus also be looking at the stock market as well too, what's happening there. Where's my overall projection target for the stock market. So got a few things that I want to cover with you today, guys. So let's get straight into it. Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty, traders. So traders, if you haven't done so, I'm actually just giving you away free access to my trading course. I know a lot of people sell their course for $500, $1,000. I used to do the same thing, but you know what, guys? I'm just giving away free access for a short period of time frame because I just want to help you guys out. So link in the description or go to johnsfreegift.com. Let's have a look at the mining sector. So the mining sector right now is giving us, we're potentially making the slingshot pattern in the mining sector. Starting off with the good old, we'll start off with the silver mining stocks, and my goodness. So just so I can, if for you guys that don't know what the slingshot pattern is, I'll just quickly go over. For you guys that do, just bear with me for a minute, and then I'll get here. Okay, what happens sometimes in the markets is the market creates what we call false. You've probably heard the terminology false breakout. So false breakouts can either break out. Breakout is like breaking up or down. Okay, so it's a breakout out. Okay, so we can see what's happening here. So if we see what the market has support, and then market goes down, okay? Then what happens a lot of the time, what happens sometimes is the market does that, boom, 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 and then the market drops down. Then what can happen sometimes is the market comes straight back up here. Now, when it comes straight back up here, that's telling us that this whole move here was one big false move or a false breakdown, false breakout of this major support level. And if that's the case, this is telling us, this move here is telling us we're likely to see what I call a slingshot move to the upside and a pretty big move to the upside. And the reason why this works so well is because if, you know, the analogy in the markets is that if something was support, okay, if something was support, then the market right down, we should come back up here, test resistance and come back down. Makes sense? But due to the fact if it doesn't come back up, now it's likely to come back to support again and do that again. So it's a pretty powerful thing. Plus also the psychology of the big boys and what they do is that they do this to get people, they do this for two reasons. One, because they run their stops, right? The big boys, they're pushing this market around, they're running the stops. So there's going to be a lot of people that are long here that are getting stopped out because their stops are below the low. Plus also the people that don't understand these markets, there's also people going short here as well too. And so not only do they come down and stop you out, but then they reverse it and then they stop the shorts out as well too. And again, this is the way the markets work. And the big boys are what we call shaking a bacon and do this slingshot pattern. This is what they're doing here. But if you can be alert to this pattern, then it can create some amazing opportunities if we're just watching and waiting and patiently seeing if we do get the pattern or not. So that's the pattern here. Now, if I bring up the SIL, which is the silver mining ETFs, we can see look at this here. Oh my goodness, it's happening right now. So we can see we had this support level through here. This whole level through here was indeed a support level. See that through there? So look what's happening here now. See, notice how we've actually had a breakdown through here. This is a big key here, okay? So we've had a breakdown. Now the question mark here is what actually happens next here? Because again, guys, I don't know and no one knows what's going to happen here. So I'm not going to make any judgment whether we are going to continue down, whether we are going to go up. I don't know. One thing I do know is I want to see if we do whether over the next week or maybe over the next few weeks, whether we do something like this and we start to turn back around again and get back up above here. If we do create this pattern here, that's going to be called what I call the slingshot pattern. And once we get that in the silver mining stocks, there's a massive, massive probability that on a conservative target that we're likely to get to a $50 level. And the way that I see this here, okay, because the way this market works is that if we get the slingshot pattern, and I've seen this work out so many times, okay, so just bear with me here. There's two targets there's two targets of this slingshot pattern, but there's one ultimate target. Let me explain what I mean here. Whenever we get a big channel like this, see how we've had a pretty big channel, right? With markets being through here. What tends to happen with these slingshot patterns is that a lot of the times the market will break down, but then what will happen is if it comes back up to here, this is now likely to be the final low for many years to come, for at least for quite some time. But when this happens, we now have a first target of at least the other side of the channel. See this here? So that's where the first target will be. But once the market gets here, we're likely to reject off, maybe for a week or two, I don't know, maybe for a month, I don't know. But we're ultimately likely to break that. And once we do break that, then we have our second target in play. And this is where the mining stocks could be setting up for an enormous boom. Because once we break, if we do get the slingshot pattern, the first target is 50. Once we get to 50, then we're probably likely to pause for a little bit because there's a lot of resistance there. And then we're likely to break the 50. And then we're likely to go to the second target, which would be a projected based off the channel. So we've gone from a slingshot pattern to the target, which is the other side of the channel. And then once it breaks the 50, then we're now likely to get to what I call the channel projected target. I call it a channel projected target because if we have a look through here, we can see how we have the channel. And then all I'm doing is I'm measuring from the high to the low of the channel. And then I'm going to extend this out like that through there to there. Makes sense? And so now I'm going to bring this down through here to here. So that tells me, looking at the SIL, okay? Looking at the SIL here, that if we do get this slingshot pattern in play, if we do get something like this, you know, we may get something like that and then a break back up like that. Or it may go V-shape. We'll have to wait and see what the pattern forms next week. But if we do get something like that, this is probably going to be the final low. And then within 6, maybe 12 months, I see the market getting to $60. Because that's the way, that's the projected target. Let me explain let me show you an example here. Okay. So let's bring up HD here for a minute. And I want to bring this back here for a minute. Okay. So this is one stock that me and my private clients were watching, because look at this here. So notice how we have what? We have the high of the channel. So there's a bit of a channel there, a bit of a resistance level. And we have what? We have the support level. So notice how we have a lot of support. Let me just blow this up so we can just get the whole chart in there. There we go. So notice how we have a major support level through here. Look what happened. We actually firstly we broke down. And then look what happened. Notice how we came straight back up. Came straight back up to this level right there. So remember what I said before, that the first target is what? The other side of the channel. But the ultimate target is what? If I produce that from there, right? And I produce that from there to there, and then you project that up like so, that tells me that, or if you bring that down just below, just from there to there, okay? Or if we bring this right up from there to there, from the ultimate high to the ultimate low point, from there to there, and that tells me that we're now likely to get to somewhere around that level there. So false breakout, meaning it came down, as you can see. So it came down, we got back into the channel. And so that tells me now there's a probability, no certainties, okay, because there is some risk, and that means maybe 20% of the time, maybe even 30% of the time, we're going to roll back over and you're going to get stopped out. That's just the name of the game. But there's a massive probability that if this thing runs up, we're likely to, 1, hit the target, which is the other side of the channel, and then secondly, hit the channel projected target, which is up there. And so as you can see, if I open up my chart a bit more, look what actually happened. We did what? we did the exact same thing, right? So you see these patterns forming again and again and again. And this is where traders, if you've been trading the markets for quite some time and you're focusing a lot on the indicators like the CCI and the RSI and the MACD and the DXC and the, you know, the whatever indicator, the number one indicator for us to become much better at trading the markets is the market itself, because the charts are giving us these patterns that gives us probabilities of where things, what's actually happening now, and then where things are likely to go based off the patterns that we can start to see in the markets. Make sense? So if I go have a look at the SIL here, so the SILJ, same sort of thing is happening right now. Now, I don't know if this is going to be a false breakout. So you don't say, oh, well, let me jump in now, right? No, because that's you trying to get ahead of the pack. Let me jump in now because I know it's going to create a slingshot and I just want to jump in now. No, we wait for the pattern. Okay, we wait for the pattern. And then when we get the pattern like that, guess what? Get in here. Now, if the market does this, there's no certainties we're going to run to the top up here and then the projected target up there, right? There's no certainties. So even if we get that, there still could be a probably a 20%, maybe a 30% chance that it's not going to be a slingshot pattern and we're going to roll over. So just, you need to be very, very, very smart about that. But if you took 10 of these trades and 3 of them did this, and then 7 of them hit the target up there, guess what? You're probably looking at maybe a 40% loss, maybe a 30% loss in your options. And then when we eventually get to the target, you're probably looking at maybe a 300 to 500% return over the course of a 6 to 12 month period. Makes sense? Because it takes time for that to eventually happen. So if I lose, call it even 50%. If I have $1,000 in the line, and over the course of say 12 months, I saw this pattern and I took it 10 times. And then I had 3 losses at 50%. So therefore I'm down $500, right? $500 times 3. I'm now what? I'm now down $1,500 here. But then let's just use this on a scale here. But then we had what? 7 times and then 300% return. So let's just call it 3,000. With me there? So what is that? 21. So we're looking at now around about a 21,000 there, right? So this is what we call a system base, okay? 21,000 minus call it the 2,000 there. We're looking at a net profit of 19,000, okay? 19,000. Now, if you started to bump that up to $5,000 per trade, you can see, you just take this, you times that by 5, and whatever that number is, 19. I'm just doing the numbers here, right? Obviously 19,000 times 5, and you have a what? And you have a 95. Is that right? Did I just do that numbers right? So 19,000 net profit over. Say this is over 12 months, okay? So you might have 10 trades in total that give you that sort of do this sort of average return, okay? The net profit is that you do $5,000 per trade, and then you just do these numbers. This net profit here, there's the net profit, say 19,000, but that's the net profit there. And yeah, I think that's right. Yeah, that there, and say times by 5, and so yeah, it gives you a $95,000 profit there. It makes sense. And so this is where guys, like, you don't have to trade a lot. Just make sure you find some really high probability patterns that work. And that's what I do with my coaching clients. I have what I call long-term trades, and I have these patterns that I trade. But then also have these really what I call short-term cash generator trades, where like 90% of the time I'm going to be in and out in a couple of days, and it's going to give me a quick short-term cash. And then I'm going to use some of these other patterns to produce some amazing returns. Now, it's not always going to be the 300% return. Sometimes it's only going to be 200% return. And other times it's going to take off like a rocket, and we're going to pick up that 500, maybe even 1,000% return. Like, we just never know. Makes sense? So I hope you can see what I'm saying here, guys, when looking at this. And this is what we call a system here. And so if you can look at even if you looked at your system as a 12 months there, And you might take one trade here and make a profit, and then you might take the next trade, it might be a loss, and the next trade might be a loss, and the next few trades might be a profit. Like, you just never know. If you can take this here and apply a good small risk to your account, then you can do really, really well, as you can see here, right? And then, that's $5,000 a trade. Then imagine if you started to do, this, but you started to do $20,000 a trade or $10,000 a trade. Makes sense? If you started doing $10,000 a trade from there, this is 19. This is obviously 10. So you're looking at $10,000 a trade, but you're risking these are the risk here on average, right? There's no guarantees of this, but you're risking that. But over the course of 12 months, by risking say $10,000 per trade, or having $10,000 per trade, and 50% is actually a big loss, by the way, especially when you're trading in the money options. And so you do that, makes sense. And then at the end of the 12 months, by only putting on $10,000 a trade, you've come out with $19,000 profit, because $19,000 profit was based on $1,000 a trade. You've come out with a $190,000 profit, and guess what? You've only looked at the market. You've only been trading the market for maybe an hour or so per day, and then you let the market do its thing. Makes sense, guys? So this is now the hard thing is dealing with the swings, okay? Because the market might go up and then not do much for a few days, and then that's when you need to stay emotionally calm. So I just wanted to share that with you there, and that's the way you can get ahead. Every single one of you can be such incredible traders. We just need to relax, look at our trading of what we're doing, have a systematic approach, and then go make a mullah, all right? Go make a mullah. So if we're having a look at the, let's actually start with the GDXJ. The GDXJ is doing the same sort of thing. Notice how we're breaking down through here. So we could be possibly getting that slingshot pattern once again on the GDXJ chart right now. Again, we have to see what happens next week. But if we have a look at the GDX hasn't actually broken. So maybe, just maybe, we're waiting to see the GDX to actually start to break below here first to give us maybe one last little flush. Maybe all the indices are all the mining stocks are waiting for that. And then once we get that, I believe we're getting very, very close to creating a major low in the mining sector. I could be wrong, but that's just what I'm seeing. And so we can see that's through there. So we just need to be patient, and we just need to make sure that there's no FOMO. And once the pattern appears, we apply good risk management. And then by the end of the 12 months, you too can be a 6-figure trader. You know what I mean? Like it's quite possible for you to be a 6-figure or even a 7-figure trader once you apply these principles throughout the year of your trading. Just not trading a lot, but trading good probability trades. And guys, you can truly do well. Okay, as I said before, like with my private clients. And if you're interested in becoming a private client, then just email me, and then I'll see if I can fit you in. It's actually closed right now, but I'll see if I can fit you in. If you are interested in becoming a private client, but even if you're not, the whole thing about this, right? As I said, as I've been sharing with you here, this is all about just saying, okay, this is the patterns I'm looking for, and I know that these are the average sort of risk to reward sort of ratios that I can look at when actually applying this in the markets. And it's just quite a phenomenal approach. And when we can just relax and look at our trading over a yearly, not from a week by week, not trying to make money every single week, because you are doomed to fail if you're trying to make money every single week, because you're going to force it, rush it, get into trades that you shouldn't, and it's downhill from there. But if we can look at our trades from an overall, say a 12-month basis, then the overall 12-month basis is, guess what? We can start to say, okay, then over the next 12 months, you might have 20 of these type of trades that come around. You know what I mean? Like, we just never know. So, but as long as you can apply good risk management to your account, then guess what? It's on like Donkey Kong. Someone said to me, a while ago, I was like, Don, you can take your Donkey Kong and shove it. Alrighty then. So anyway, having a look at gold. Gold's still in an interesting pattern, an interesting formation with gold, because on the short-term picture, is gold going to be... Well, the really interesting thing is gold has been rallying, but mining stocks haven't been. So is that telling me, like, I would say that probably a lot of people that trade the mining stocks are probably holding on to the mining stocks because they're like, well, gold's going up, so the gold mining stocks are going to go up. So they're probably confusing the hell out of the people who are mining stocks. So we may even get a bit of a short-term downward move here, guys. So we need to keep an eye on what sort of pattern forms here, because now I want to talk to you about trend analysis. Because if we get a little bit of a drop through here like this, like that, then it's probably going to continue to flush down the mining stocks. But if we do get that, and then suddenly we start to get a little bit of a pause or a support, especially at a Fibonacci level. So this is where I'm looking at the if scenarios. This may not happen next week, but if we do start to see a short-term little drop, we need to watch out for what I call the 50% Fibonacci. So we have from the low to the high point, and if we can see what's happening here, right? We had a move up and come back down. So if we do start to have a bit of a pullback next week, because it looks like it's pausing, we have a lot of support around the 1800 level right now, all through there. So it looks like it's having a bit of a pause there. If indeed we do get a bit of a pullback, what we want to wait for to see, okay, whether the buyers are really coming in. If we do get that, we want to see our market to retrace 50%. So this is the 50% Fibonacci level right here. We want to see the market retrace there or less and hold and start to move back up like this to create a higher low. If we can get this sort of pattern happening over the next, say, week or two, and again, it may not even go down, it may just go straight up, okay? So we need to just keep an eye out for this pattern. If we can get this, now we have a low, now we're getting into powerful trend analysis. Now we have a low. If we do get that, we're gonna have a higher low breaking past previous what? Highs. If we get this. And what does that mean? In an upward trend, we have what? Higher lows breaking past previous highs. This would tell me, if we did get this, that this is a very, very powerful pattern. And then once we get this, then it tells me that this is probably going to be this sort of low point through here is probably going to be the final low in gold from this overall big downward move that we've had. And because see what I'm doing here, guys? And look at all I'm doing is I'm just utilizing the charts. There's so much power in the chart itself. For me, I don't know about you guys, but using the indicators and all that sort of stuff, the only indicator that I use is moving averages because it gives me a good gauge on where the stream is going. Okay, where is momentum happening? Where is momentum right now? If I can get a good chart set up and a good momentum or good moving average behind me, good strong moving average, then that's beautiful, right? That's the only thing I want to see there. But the reason why I don't use indicators is because they confuse the hell out of you, right? We could be in a big bull market and the indicators are oversold for quite some time. Or, if you're looking at all these, like one indicator says sell, one indicator says buy, and it like confuses the hell out of you. But every single indicator is actually derived from the actual chart itself. And so things that I'm talking about right now, which is like what? False breakouts, end of trend indicators, powerful patterns. The market is always talking to us, and it's our job to say, okay, what's happening right now? And as each day goes past, it's our job to recognize the patterns. It's like, okay, the market's doing this. Let me respond to it. So if the market does this here, that would tell me that this here is now probably the final low for quite some time to come. And now we're getting the higher low. And then now this is probably going to be, if we do get this is going to be a very, very powerful point to, let me take everything off the screen here, to now start to see an incredible move to the upside. So we'll just have to wait and see what actually happens through there. Again, 50% Fibonacci. I know we definitely have, around the 38% Fibonacci, we definitely have a lot of support through there. So that'll probably be a bit of a support level for us if we do drop down. But we want to see what actually happens here, because if that starts to form, guys, it's going to be it's going to be really, really nice. We're already right now, this here is already, this level through here is already potentially being a V bottom, and also potentially a false breakout, as you can see from there to there, bit of a false breakout from there to there. So again, just watch the pattern, guys, because there could be something powerful forming in gold. Moving over now through to silver, and silver looks like it's continuing down, and I wouldn't be too surprised if I bring up my moving average now, which is I like to use a couple of moving averages. The 52 moving average I really like to use, a bit more of a longer term. And then also I like to use a 20 moving average on the charts. I think the 52 is one that I learned from my earlier mentors, and the 20 is one that I just like to use on a short-term basis. And we can see the market is making lower high, lower high, lower high. Not much going on right now, but the moving average is strong on the downside. That tells me momentum, or the stream, is strong on the downside. So I wouldn't be too surprised, guys, to see silver next week start to do something like this and have a bit of a flush down to get below this level here. But what is this level here? And this is where silver now is coming into a potential false breakout. People say, John, it's called a false breakdown. Okay, you know what I mean, okay, guys? So let's not get technical here, but it's breaking out of this pattern here. If we do get something like this coming into next week, which I do believe we're likely to, shake out the weekends of all these major lows through here. And then if we get something like that coming into it, well then guess what? Final low. And then for me, the ultimate target, if we do get that on silver, would be up there close to $36 in the market. So very, very, very powerful. Move over now through to the good old Dow Jones, and the trend is your friend until the end, and the trend is just still up. There is nothing wrong with this, and people that are continuing, and I know I've seen some people in my comment section, or a few anyway, that are shorting this market. Guys, the trend is your friend until the end. Don't fight the markets. Okay, we continue to get in these higher lows. Okay, we had a bit of a sideways there, high low, equal low, or a bit of a lower low. Then we had a higher low, and now look what's happening here. We're getting another higher low. Same for the S&P 500. Look what's happening all through here. There's been nothing but low, slide higher low, higher low, higher low, higher low, higher low, and now look what's happening. We're now bouncing again. So until the market changes, don't be fighting the markets here. Some people are shorting the markets now. Guys, the market's in an upward trend. Like, the trend is your friend until the end, right? So please don't be fighting this market. And same for the Nasdaq. Like, look what's been happening with the Nasdaq. The Nasdaq could just be doing what? I'm in the SPY and the Nasdaq. So we have a low, market ran up, higher low, ran up. This could just be another higher low before we go for another run again. So please don't be shorting this market. Now, just a quick little update on the targets for me. I've had these targets for many months, and you can see that actually on my YouTube channel. I still have a 17,000 target on the Nasdaq by the end of this year. And also, I have a first target of 5,000 on the S&P, and then a second target, if we get to 5,000, depending on the time frame, the second target is 5,400. But I have a first target of 5,000. So that's up there by the end of this year. So they're both my targets, guys. I'm long the SPY right now, and I've been long for quite some time. And also I am long the QQQs for that reason. And I've been long with the QQQs. You can see this circle here when we broke out above this resistance. That was game time for me. And then the market's been going up quite nicely ever since there. So guys, please don't fight the market. The market's in an upward trend. If we do start to see the market shaking and baking, meaning we're going to roll over, then we need to listen to it and be alert of that. But right now, nothing has changed, so we cannot fight the market. Hey traders, I'm giving away 100% free access to my brand new Breakthrough full trading course. This is 8 videos over 10 hours of pure amazing and powerful strategies. This is my most powerful systems and strategies that I've used for the last 16 years, and I'm giving it away for free. So this is what I want you to do right now. I want you to go to johnsfreegift.com, or there should be a link around here somewhere, a button or in the description or somewhere in there. Click on that and you can go get free access to my brand new Breakthrough trading course. So go to johnsfreegift.com right now. Go to that right now, guys. You can get full, complete, free membership access. Go do that right now.